Hello and welcome to Beekeeper. I'm Hiral Dadia. Overall, if you see in terms of markets, clearly no major moves coming in terms of Nifty as well. A pretty flattish move there now as we speak. Overall, if you see Bank Nifty, there is some bit of movement there. We're seeing an up move of almost 100 points, but a lot of stock-specific action and news in the making today. To discuss more and what you should do with these stocks, we have Vijay Chopra from Enoch Ventures joining in. Vijay, good morning and welcome to the show.
Hello, Hiral. Thank you. Thank you for having me on the show.
Always a pleasure. Vijay, let's start with a Tata Motors. This is a big EV push that they're looking at as well, where they're vowing almost $19 billion and the first electric Jaguar launch in 2025. Firstly, what do you think this would actually mean from a strategy perspective, company's perspective, and what should an investor do?
Hiral, there are a few points I would like to make here. If you go back 5-7 years, Tata Motors was looked upon as a beaten down company as far as the domestic sales were concerned, and they were primarily dependent upon the JLR sales. Now JLR sales are coming from China. Pre-COVID and post-COVID, we've seen that China has been showing a slowdown, but now there is an uptick in China. There is a definite slowdown. I won't call it a recession, but a slowdown in Europe and in the US, which are also reasonable markets for Tata Motors. But apart from that, India is also one of the markets where Tata Motors has been getting attraction. Now we have to understand. Now with all the might of JLR, the designing might and the engineering might of JLR, we have seen a major revamp in the models launched in India. So now Tata Motors is looked upon as a very different company as it was 5-7 years ago. So we've got brands like Altroz, we've got brands like Safari, and other cars they've been launching, and they've been now we are seeing those on the roads. People are liking it, and the performance and the styling is very good. Now coming to JLR, I think that with the China numbers, we've had GDP numbers a couple of days back. I think there is a good chance that we are going to see a revival in China. China has almost bottomed out, and we will see an uptick in China from here. This means that JLR numbers from China are going to improve significantly. Secondly, the company has been trying to bring in the latest technology as well as the EV is concerned, and JLR is going to come up. In India, Tata Motors happens to be having the largest share of EV vehicles. It is close to 60%. Now, mind you, it is a backward integrated and the forward integrated company, from steel to cars to the charging infrastructure of Tata Power across the highways. So I think that Tata Motors as a company, if somebody wants to hold with a longer term perspective, they can do that. I see this stock even doubling up in a couple of years' time. And similarly, Tata Motors DVR is also a better option, because I think there's a lot of valuation catch up which needs to happen. Globally, the difference between DVR and a normal share is generally 20-25%, but here the distance is much higher. So I think that there's a valuation catch up which Tata Motors DVR would do. So both TVR as well as Tata Motors look good with a longer term perspective. There might be hiccups in the shorter term, but that's okay.
Right, so that's with regards to Tata Motors. Moving on, you have a Bajaj Electricals that is in focus today, and you have a Norwegian government pension fund which has picked up around 1.7% stake in the company. Now, from a business perspective, how are you looking at a Bajaj Electricals? Do you see good upside from here on, taking the season into consideration as well and the demand from there on?
We have to understand one thing, that the inflation has been ebbing now. And with the inflation coming down, the raw material prices, which most of the electrical companies, were struggling with, they are also going to come down. This means that we're going to see an uptick in the profitability. If I'm able to, I'm looking at the balance sheet right now. From a number of 4768 crores in March 22, the TTM number of sales is 5249, and similarly, the operating profit has considerably improved. This means, from 227 crores in March 22, the TTM operating profit is now 328 crores. So, in the coming quarters, we are going to see an improved performance. So this would be true with all the companies, whether it's Havels or Bajaj Electricals, all the good companies, we can think of. So I think with the longer term perspective, the the group is good. The sector is good. I think it's into fairly a good consumption space. And if somebody is looking at 12 to 18 month perspective, they can get into a Bajaj Electricals. They might be, that it might consolidate for some time, but I think that once it starts, it can go back to 1200, 1250 again.
Right. Moving on, apart from that, if a Mastek, which is an interesting play because with the kind of commentary that the management has come out with post the earnings, they have indicated that FY24 will be a stronger year and they will probably be able to beat the industry as well in terms of the year on year growth. However, there is uncertainty and they're cautious about customers in terms of deals as well as the decisions by the customers. What do you make out of this commentary? Because overall, there is a lot of gloom and doom across the IT industry as a whole with the way Infosys and TCS panned out, but a positive commentary coming in from Mastek, what is that indicating?
Well, catching the bottom is never possible. Yes, these companies have been around for a number of years, especially TCS, Infosys, and HCL Tech, and even Mastek. They are experienced companies, and they have seen, a lot of storms during their tenure. So I would say that if the management is confident that it's going to perform better in 24, which I think, slowly and steadily, the life is going to come back to normal as inflation comes down, as the interest rates start coming down. There would be extra disposable incomes with companies as well as individuals. They will spend on IT. And one thing we have understood very clearly that, the tech is the way forward, and nobody can deny this fact. That technology is ever going to keep on evolving and is going to surprise us. So with the commentary which the management is giving, I think that one can start nibbling into the stock. It has the potential of going up to 2500. So there's a long way to go. So keep on nibbling. Maybe 25-30% at this point of time. One can start investing into IT. And this I'm talking about not only about Mastek, even about Infosys, even about TCS. So keep on nibbling these stocks on every decline. I'm sure these companies are IT bellwethers, and they're going to come out very, with bright colors.
Right. Moving on, the sugar pack has been in focus as well, and that's mainly because the way sugar prices are panning out. Now, on the back of lower output, the expectation is that the government could probably curtail the export quota as well. How are you looking at the sugar pack? Because this has been something where any political move, anything that happens, from a government perspective, also direct impact does come in. How are you seeing sugar and any topics there?
A couple of things I would like to mention. Number one, that the revamp in the sugar sector has happened post the ethanol blending has started in India. If you look at all the big major sugar companies, they have increased their capacities for ethanol. Earlier, ethanol was primarily sourced by the liquor companies, and it was sold at at a very cheap price, 2-3 rupees a liter. But now the ethanol prices have shot up considerably, and they are selling at about 40 to 50 rupees a liter. So government needs it uh, for blending. The blending target has been increased to 20% as of now. There's a lot of testing going on. Mind you, in countries like Brazil and Venezuela, the blending is as high as 70-75%. So there is a huge scope of ethanol blending, and the dependence upon the import of fossil fuels, which is a huge burden to the exchequer, because because we are dependent upon foreign countries for import. So ethanol blending is going to increase, and so this benefit is going to pass on to the sugar companies. Number one. Number two, international sugar prices have been trading steadily above $20-21. This means that globally also there's a increase in prices, due to which the sugar companies are doing good. Now, if there is an export ban, this is not good for the Indian companies. So I don't know. The political part of this sector is that government keeps on fiddling with the affairs of sugar companies, which I think is not good. Sugar companies have come out of their huge pile of debt. If you are asking me about my choices, I think that stocks like Bajaj Hindustan Sugar, AID Parry, Balrampur Chini, these are great companies to have in a portfolio, and especially EID. which is a Burugappa Group company.
Hmm.
So there are good options. Balrampur also is a very good company. Dwarikesh Sugar is also a very good company. So these are trading at a very low price to earning. The earnings are stupendous, and mind you, once the monsoons are over, we are the largest consumer of sugar in the world. Once the festive season starts, the offtake also starts considerably. So generally, summers and monsoon are lean season for sugar. But once the monsoon ends, our festive season starts, the sugar offtake also increases dramatically across the country. So not only internationally, but on India also, I think that sugar prices are going to be firmed through the year, and this benefit is going to be passed on to the sugar companies. And if at all government fiddles with the export thing, there might be some correction.
Right. Moving on, you have a container corporation that is in focus as well. Now, clearly, since the peak that we've seen in November 2022, the valuations have corrected by almost around 20-25%. With this, if you see in terms of the rail logistics, the company has the highest market share. And the commissioning of the dedicated freight corridor, which will take another 12 to 18 months, how good a potential buy is a Container Corp of India at current levels?
It is a fantastic buy, I would say, because as post COVID we came back to normal. Initially, the logistics price were pretty high. The companies were not, operating on full potential. But I think that as normalcy is gathering up, catching up, so I think that Concor should do well. There was also a disinvestment plan around Concor, so which might again, gather some steam. So Concor at these valuations is fantastic. The business is good. It's into a very growth-oriented space. So I think Concor should do well. One can buy for a target of 700 plus.
Right. Apart from that, you have the metal names that are in focus today as well on the back of the Alcoa numbers, which have come in, and they've clearly said that lower prices for its metal making ingredients is something which is going to help them reduce their production costs in the coming quarters. And the demand with regards to aluminium stays really robust. How would you look at a Hind Zinc or a Hind Copper, for that matter, Nalco, the companies which directly see some bit of a sentimental impact coming in from the way Alcoa numbers have panned out?
Well, I think the best of the lot is National Aluminium Nalco. One, that it has a coal linkage from Mahanadi coal field, so the production cost is lower because all the other companies have to source coal, which is required for metals. So I think that National Aluminium at around 80 to 83 levels is a fantastic buy. It can go up to 120, 125. The return is fantastic. The other one is Hindalco. So I think that Hindalco is a great in itself. It's an institution in itself. So I think Hindalco at 434 levels is a screaming buy. If somebody wants to buy with a longer term perspective, there might be corrections, mind you, and the investors have to understand that these are markets. It goes up, it comes down. But if you gather or accumulate quality stocks in such times, they're going to pay off wonderfully. So it's a good Nifty 50 dividend yielding, fantastic Aditya Birla company, and one of the best mines they have in the world. And finally, Hind Zinc is also one company which I like. So all these three companies are looking very good on the charts and fundamentally also.
Right. So I think that's going to be a space we need to wait and watch as well. Thank you, Vijay, so much for joining us on the show and giving us those views in terms of the newsmakers of the day. Thank you. Stay safe and speak to you soon again.
Yeah.